Hello friends, welcome to our channel SNK and Company. Let us begin with this week's updates under the Income Tax Act, GST law, and other corporate laws. We start with the Income Tax Act. The Mumbai Tribunal, in the case of Rotary Club of Bombay Queen's Necklace Charitable Trust versus ITO, held that exemption could not be denied to a charitable trust merely due to delay in filing the audit report in Form 10B. The tribunal noted that the delay had been reasonably explained, as the revised Form 10B utility was released late. Since the audit report had been uploaded before filing of the return and was available during processing of the return, the assessing officer was directed to consider the audit report and allow the claim of exemption. The Punjab and Haryana High Court, in the case of Punjab State Cooperative Supply Marketing Federation Limited versus Chief Commissioner of Income Tax, dealt with waiver of interest under Section 234B. The court held that where the assessee had not paid advance tax due to reliance on a jurisdictional high court decision, granting exemption under Section 80P2, which was subsequently unsettled by the Supreme Court and later addressed through retrospective amendment, the assessee was entitled to waiver of interest. The court observed that the assessee, being a public sector undertaking, had no malified intention to evade tax, and the matter was covered by relevant CBDT circulars addressing situations of legal uncertainty. In the case of Deputy Commissioner of Income Tax versus FA Construction, the Mumbai Tribunal held that cash withdrawals from disclosed bank accounts cannot be treated as unexplained money under Section 69A merely on the basis of suspicion regarding utilization. Since the assessee had established the source of cash withdrawals through bank records, books of account, vouchers, and site-wise details, the addition made by the assessing officer was held to be unsustainable. The Chennai Tribunal, in the case of Deputy Commissioner of Income Tax versus Sitaram Jewelers, held that once the assessing officer had identified unaccounted purchases and brought the profit element of such transactions to tax as business income, treating the same transactions again as unexplained expenditure under Section 69C would amount to double taxation of the same income. Accordingly, such addition was held to be unsustainable. The Mumbai Tribunal, in the case of Arvind Bhanguji Kengane versus Deputy Commissioner of Income Tax, dealt with exemption under Section 1038 on long-term capital gains from sale of shares. The tribunal held that where the assessee had furnished documentary evidence such as the letter of allotment, bank statement evidencing payment of purchase consideration, and DMAT account statements, the primary onus stood discharged. In such circumstances, there was no justification for treating the long-term capital gains as unexplained cash credit. We now move to important updates under GST law. The Karnataka High Court held that renting of a residential dwelling for use as residence is exempt under Entry 13 of Notification NEMA, September 2017. In this case, the petitioner had leased a residential property to an educational foundation for use as accommodation for students, staff, and teachers. The court held that such use constituted residential use and therefore the rent received was not liable to GST. The refund claim was directed to be reconsidered in accordance with settled legal principles. The Kerala High Court held that composite show cause notices and adjudication orders issued under Sections 73 and 74 for multiple financial years are invalid. The court observed that the GST law does not provide for consolidated proceedings for multiple years, and each tax period must be dealt with separately. Consolidation of proceedings was held to be prejudicial as it affects limitation and statutory pre-deposit requirements. The court therefore directed issuance of separate year-wise notices. The Bombay High Court held that assignment of MIDC leasehold rights along with factory building to another party, with prior consent of MIDC constituted transfer of benefits in immovable property, since such assignment resulted in extinguishment of the assigner's rights and did not amount to leasing or letting under Schedule 2 of the CGST Act, and the transaction lacked nexus with business activity, it was held to fall outside the scope of GST levy. We now move to updates under other corporate and enforcement laws. In the case of Rohit Sehgal versus Additional Director, Directorate of Enforcement, FEMA, New Delhi, held that where the appellant continued to hold and remit approximately $1.28 lakh from a foreign bank account after returning to India and failed to satisfactorily establish that such funds were legitimately earned during the non-resident period, the protection available under Section 6(4) of FEMA was not applicable. The appellant was therefore held liable for contravention of Sections 3(a) and 4 of FEMA, although the penalty was reduced to 1.5 rupees lakh considering the circumstances of the case. In another matter, FEMA, New Delhi, in the case of Vipin Print Services Private Limited versus Assistant Director, Enforcement Directorate, held that where the company had underdeclared the value of imported printing machinery, contravention of Section 3(b) of FEMA was established. The company and its managing director were held liable for penalty. However, directors who were not actively involved in the management of the company were exonerated, and the penalty was reduced to the extent of the amount already deposited by the appellants. These were the key updates under income tax, GST, and corporate laws for this week. Stay connected for more important developments.